Okay, new week, new opportunities. Apologize if the sound is a bit muffled by my fan going bonkers at the moment. Not quite sure why. Anyway, so we're here on the gold chart, and I'm just going to do a little analysis on this for the TradingView community and the YouTube channel. And while I'm there, I'll just stick that up. So there you go, RJB Forex. Right, anyway, so look, so we're heading into a new week. We've got the blackout period in terms of the Federal Reserve, meaning that we will not have any more Federal Reserve speakers until the beginning of February and after the Fed decision. The market is pricing in a 25 basis point hike. As opposed to the prior more aggressive hikes from the Fed. And the market's got a bit of a boost on Friday, which gave rise to a pretty nice trade for us in the Dow, which I'll just stick up here where I can find that. A second. Over here. So we got in here, equal lows. This was a consolidation. We got the burst out of the consolidation. It was a nice 4 hour trade. There's plenty of that information, or analysis on the YouTube channel from start to finish, explaining that. Anyhow, so let's just stick with gold. Um, as I said, we've got the Fed blackout period. Waller was speaking, nice and dovish for risk on Friday. Um, that may continue at the start of the week. So we're looking for a push up to come down. So quick rendition of this then using the weekly template. We've got major structure over here, which I think we're going to tap into potentially. Um, we've got longs in the market, breakout longs here. This high ball major resistance, we've tapped into that already. So we've got trapped bulls here on higher time frames, pushing up into the counter trend line, which was broken over here last week, last week, and we've been pushing up ever since. So we've got this trend line here, which we're trying to get below. So we've got this major, the current structure, 1920s, which is around the prior week's lows over here. Highs. I've written lows, not highs. Um, so yeah, so last week's highs over here. So we're resting on top of that. So all of this is trapped um, longs in this consolidation. So what I figure, I mean, we've come up to the minus 272 Fibo of this leg. Um, yeah, sorry, just get my bearings here. There's quite a lot of analysis going on. So you've got this bullish run, and then you've got the correction of that, right? So we've drawn the Fibonacci on this correctives range. We've tapped into the target, minus 272. I did something there on FX Street with regards to this playing out over the course of last week, and we're subsequently coming back off. So trying to keep this brief. So we've got this trend line which we're tapping into. If we can get a break of that in structure, then that's going to be bearish, right? So on the weekly template, we've got bulls in the market since Thursday. Well, in fact, we had this, as I said, this move into the correction, moving up. So we've got bulls in the market. You can either look at this as a harmonic pattern playing out or played out. So draw that here, 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 to here, right? I mean, it's not strictly speaking a harmonic pattern as per the Gartley and so forth, but it's near enough, right? So you've got this thing here playing out. Um, so a move into the neckline is what's happening currently. Just get rid of that. Yeah, so we've got balls in the market being trapped. We've got this correction of this move, impulse correction. Now this could well continue higher for a further test higher up, and that could be the gameplay to start the week. If the market is fueled on last Friday's bullish rally in risk on the Fed sentiment for a less hawkish Fed, then we could see this continue up higher, attracting again bulls into the market only to potentially come back down in the sort of 3 to 4 day setup. So we're looking for a move up. So we've got down, continuation higher, pulling in bulls, and then to come back down, breaking structure, the trend line at least, back up to test it, coming down, breaking the structure. You've got a nice head and shoulders coming on here, retest in, and a explosive move to the downside. Um, so we've got the initial balance to start off the week, pushing higher potentially, only to trap those longs and take us down for a nice explosive opportunity a little later in the week for a test of major structure. And I mean, that might make sense in the build up to the Fed for the beginning of February, to see some consolidativeness up into the event, coming around here into the event. And then if it were to um, turn out to be uberly dovish, then that would be the fuel coming down into here, um, taking out some length in the market, only to push up again for a continuation higher. Failing that on a particularly non-dovish outcome, then you'll have this major structure here for a break of and a move, subsequent move lower into all of the length that's been built up on sentiment of a less hawkish Fed. There's plenty of Fed speakers to the contrary of that market sentiment. Many analysts are arguing that the market is wrong footing itself, and that would be a beautiful downside opportunity, tapping into last month's highs and so forth. So, how might that play out? So, we might have a first red day. This is the daily chart. So, we've got this first red day potentially turning up. So, moving to come down. And we'll be heading into major red news on the US calendar with core PCE, and real gross domestic product on the 26th and 27th consecutively. Um, so those are the major highlights on the calendar to look out for um, on the US calendar, which is essentially what we're going to be concentrating on leading into the Fed next week.